Motley Fool just invested $1,237,213 into a single stock, and I reveal it here for free so you don't have to buy the Fool's newsletter. Just keep in mind, this is all guesswork based on clues from the publicly available sales presentation and does not include any paid or proprietary information. Before we do anything, let's take a look at the Fool's track record. They recommended Sonos as one of the best stocks under $30, but it hasn't performed well. They recommended Lincoln Electric in November 2024, and the stock is down slightly so far. They recommended BWX Technologies, and the stock is up slightly. The Fool recommended Shopify for the 9th time in December 2024, and the stock is up slightly in 6 months. And the Fool has recommended ASML many times throughout the years, and started recommending them in November 2022. The stock has done well since. Let's look at the email the Fool sent me and figure out the stock now. Here's what they say. At the Motley Fool, we don't just talk about great stock ideas, we act on them. So when our analysts uncovered a company making major moves in both artificial intelligence and cybersecurity, two of the fastest growing industries in the world, we didn't hesitate. We invested $1,237,213 of our own money into the stock. And then the Fool says, why this one company? Because it shows the same powerful traits we've seen in past market-beating stocks like Amazon, Nvidia, and Tesla. Cybersecurity, a $2 trillion opportunity and growing. Artificial intelligence, a projected $15.7 trillion global market. Explosive financials, rising revenue and operating cash flow. Enterprise traction, 40% of Fortune 500 companies are already customers. AI advantage, actively integrating artificial intelligence into its core business. I'm going to reveal the stock in 10 seconds, but just want to remind you to click the link in the description to get $50 off Alpha Picks when you're done watching this video. I reviewed 100 stock picking services, and Alpha Picks is by far the best, and this is a service all investors should own. Based on the clues and knowing the Fool, this is definitely CrowdStrike, ticker CRWD. Founded in 2011, the CrowdStrike has quickly become a global leader in endpoint protection, threat intelligence, and proactive threat hunting. CrowdStrike uses artificial intelligence, machine learning, and behavioral analytics to offer real-time protection across endpoints, workloads, identities, and data. At the heart of CrowdStrike's business is the Falcon platform. It's a unified cloud-native architecture that delivers endpoint detection and response, extended detection and response, threat intelligence, and IT hygiene. The platform's design allows it to be lightweight, scalable, and constantly updated through the cloud, making it a favorite among enterprises that need quick, adaptive threat protection. CrowdStrike also offers identity protection solutions that help detect and prevent credential-based attacks. With many attackers targeting user accounts, this area of the business focuses on preventing lateral movement within networks and securing cloud applications and Active Directory environments. CrowdStrike provides advanced threat intelligence to help organizations understand who is targeting them and why. Their Overwatch team consists of elite threat hunters who work 24/7 to uncover stealthy attacks. This intelligence is integrated into the Falcon platform, enriching detections with contextual insights that improve response times and incident outcomes. For customers without a full in-house security team, CrowdStrike offers managed detection and response through its Falcon Complete service. This is essentially a fully managed security operations center that handles all aspects of detection, investigation, and remediation. It appeals to mid-sized businesses and even large enterprises looking to outsource certain security functions. CrowdStrike is no longer just an endpoint security company. It has evolved into a full-spectrum cybersecurity platform, offering solutions across endpoints, identity, cloud workloads, log analytics, and threat hunting. Its cloud-native architecture and focus on AI give it an edge in a rapidly changing threat landscape, and its ability to expand across multiple cybersecurity verticals positions it as a long-term player in enterprise security. Here are the top 9 things investors should know about CrowdStrike, and after I'll tell you if I'd buy. During its earlier years, CrowdStrike routinely posted revenue gains north of 50%. Fiscal 2024 still showed strength with revenue up approximately 36% to $3.06 billion, and Q1 fiscal 2025 saw 19.8% year-over-year growth to $1.1 billion. Still, that's a clear deceleration from its hyper-growth phase, marking the company's shift into a more mature, steady growth era that will now require a different kind of execution. Then came one of the biggest challenges in the company's history. On July 19, 2024, a flawed Windows update delivered through the Falcon sensor triggered a global IT outage affecting over 8.5 million devices, including critical systems in healthcare, aviation, and finance. The fallout was immense, costing billions in lost productivity and forcing CrowdStrike to offer discounts and repair its reputation. Yet, despite the scale of that crisis, CrowdStrike rebounded impressively. Annual recurring revenue, ARR growth remained intact, customer loyalty held firm, and analysts were quick to reestablish confidence. Within weeks, CRWD shares not only recovered but surged to new all-time highs, showcasing how resilient demand for their cybersecurity tools really is, even in the face of a major stumble. Looking at Wall Street's perspective, the sentiment is mostly bullish but not without caution. Around 25 analysts currently rate the stock a buy, with average price targets ranging between $488 and $520. Bulls like UBS and Deutsche Bank point to CrowdStrike's leadership in AI-enhanced cybersecurity, while more cautious voices like Bank of America warn that the current valuation leaves little margin for error. Adding a dose of realism to the bullishness, CrowdStrike's Q2 FY25 guidance raised a few eyebrows. While Q1 earnings beat expectations, the company guided Q2 revenue to just $1.14 to $1.15 billion, below consensus forecasts. That softer outlook triggered about a 7% stock pullback, serving as a reminder that even strong companies aren't immune to macroeconomic caution or sales cycle delays. But here's where things get exciting again. AI is CrowdStrike's not-so-secret weapon. The Falcon platform is increasingly driven by machine learning and generative AI, enabling faster, smarter detection and automated threat response. With initiatives like extended detection and response gaining traction, CrowdStrike is carving out a leadership position in the AI arms race within cybersecurity. Building on that confidence, management recently authorized a $1 billion share repurchase program. It's a clear sign that leadership believes the stock is undervalued and aims to return value to shareholders. The buyback also helps offset dilution from stock-based compensation, a move often seen in tech as companies mature and focus more on sustainable capital allocation. To further streamline operations, CrowdStrike reduced its workforce by about 5% in May 2025, roughly 500 positions. While the cuts spared core AI and engineering teams, they do signal a broader push for efficiency amid slower top-line growth. The cost savings are likely to help margins, but some investors worry this leaner structure could impact future innovation if not carefully managed. Rounding things out, there's a legal issue still hanging over the company. Delta Airlines filed a $500 million lawsuit claiming gross negligence from the 2024 outage. CrowdStrike insists that liability is capped by contract and says it's addressing the matter. Still, the case introduces reputational and legal risks that could affect enterprise deals or spark additional scrutiny going forward. CrowdStrike is an attractive company with strong fundamentals. It's wildly profitable, still growing rapidly despite its size, and carries a positive long-term outlook. The company's Falcon platform continues to dominate the endpoint security market, and with over 60% of Fortune 500 companies as clients, CrowdStrike clearly has trust and momentum on its side. However, there are a few concerns that give me pause. First, there was the massive global outage in July 2024 that shook the corporate world. A single misstep with a Windows update pushed through CrowdStrike's Falcon sensor triggered widespread downtime, impacting millions of devices and causing a 30% drop in the stock's value in just one day. That kind of volatility, tied to an internal error, makes any investor a little cautious. What makes it more concerning is the nature of the business. CrowdStrike is a cybersecurity firm protecting high-value clients. These companies are frequent targets for cyber attacks from hackers, criminal organizations, and even nation-states. If a major client is forced offline for an extended period due to a breach, whether it's CrowdStrike's fault or not, it could trigger another sharp correction in the stock price. Then there's valuation. CrowdStrike currently trades at a forward PE ratio of around 133, which means a lot of future growth is already priced in. At these levels, the margin for error is small. Any earnings miss or negative headline could send the stock tumbling, even if the company remains fundamentally sound. Some investors still view it as a buy today, and that might prove right over the long term. But personally, I'd prefer to wait for a dip. CrowdStrike has had several pullbacks over the years, and it's rebounded impressively each time. So my strategy is patience. I'd keep it on the watch list and wait for a day when the headlines are scary and the stock is down, because that's often when the best long-term buying opportunities arise.